Most of the space engineering is used to manage risk and to assess risk. When you look at most of engineering studies around space projects, there are risk assessments. All the risks are well defined with mitigation solutions. And that's probably the only industry where you do this, maybe in the chemicals or probably health industry too.
Hello, space enthusiast. You're now listening to Space Forward podcast. I'm Hussein Bukhari, your host. With me are Matthias Frenzel and Benjamin Shapiro. In this episode, we wanted to understand the mindset and the decision tree space business angels are following when they make their investment decisions. What are common best practices and how they see space sector and its growing opportunity. Our guest today is the chairman of EBAN Space, the space branch of European's leading early-stage investor network, and co-founder of the Luxembourg Space Tech Angels and Mana Electrics. Fabrice Testa, an aerospace engineer by training, is a Luxembourgian space business angel, serial entrepreneur, co-founder, and chief financial officer of Mana Electric, which aims to be the utility company of the solar system and building solar panel on the moon. Fabrice is a shareholder in the Space Angels and as a mentor, coach, and in several other roles, he has supported startups to scale their ideas. So let's get started on the episode. All right, I have a lot to say because you have done so much. So I'm very, very curious as to, would you like to give us a bit of an introduction? You have been a chairman of EBAN Space. You're a Luxembourgian business angel, serial entrepreneur, co-founder and CFO of Mana. And that's a very, very cool name, just to me, because it means something very special to me. And you're the head coach of Space Cohort, Edition 9 of the Acceleration Program. I'm very, very curious as to why did you make the transition to space?
Yes, thank you for inviting me and for the question. I had a passion for space since my early age, and probably as far as I remember, I was a big fan of Star Trek. Of course, Star Wars, but probably Star Trek was for me, my preferred, let's say, series, with Captain Kirk, adventures, etc. Yeah, I think from an early age, I wanted to go to space, to be an astronaut. And I remember that I discussed with some people, giving advice for studies, etc. And when I told them, look, I would like to be an astronaut, they were very, very surprised because it was not a usual request. And then they said, look, probably you need to study astronautics, etc. And in Belgium, because I'm Belgian, I'm not Luxembourgish, I'm Belgian. In Belgium, around Liège, there is the University of Liège, and it's the only school in Belgium where you can learn aerospace. So I decided to study aerospace engineering. To be honest, I did like, let's say, the technology aspects, but I think that already from that period of my life, I didn't like really, or I didn't, let's say, see me really as an engineer. But I like technology. I wanted maybe to leave, to be a jet pilot. Finally, people told me, look, you are doing well in the engineering. It's better that you finish to graduate as an engineer. So I graduated as an engineer. There was the first tendering from ESA for the first astronauts by that time, but I was obviously too young without experience. So I decided to wait. I started some career as an engineer in a space company. And we were building optomechanical instruments for many scientific experience. I did this 2-3 years, but it was not really my stuff. So I decided to transition to business and entrepreneurship. quite very soon I created my first company. It was in the multimedia field. We were mainly building interactive systems, so not really websites. And then I left, let's say, the space industry to enter another industry, which was the entertainment industry and the digital transformation. To finally come back to create a company, a space company in Luxembourg, and it's how I started back in end of 2012 with a space satellite company. And so finally, yes, I think space was always there, of course. But I took different paths, I would say. But then now, yes, I'm again back fully in space. As you mentioned, as a chairman of EBAN Space, I'm also the co-founder of the Luxembourg Space Tech Angels. I co-founded this company, Mana Electric, where we have this long-term vision to manufacture solar panels on the moon. Yeah, and I'm also involved in different other companies. I'm also a small shareholder of Space Angels in the US, which is a key player, let's say, in the space or the new space economy. So yes, I'm involved in different aspects, and probably space was always there for sure.
Yeah, so passion, move from passion, come back to passion. Was it hard for you to come back, or was it just natural?
No, I think there was not really. It was natural. I think it was probably a natural, let's say, comeback. I had this inside of me, probably I have space in my blood. No, I'm passionate about space, but yeah, generally speaking, I'm passionate about business, about entrepreneurship. Today, through my work at different levels, what I want is to make my contribution, let's say, to build a better world. And I do believe that space is an enabler in that respect, because most of space utilization is very helpful to better, let's say, manage planet Earth, to create of our future will be in the space with space exploration. I do think that, space is a big component. It's not the only one, of course. It's why I like this new company, Mana Electric, because we have a clear, let's say, mission to contribute to the environmental, let's say, challenges by building, let's say, clean solar capacity on Earth. And we have this long-term vision that will help somehow humans to establish themselves on the moon.
No, I just want to set the tone for our topic today, space investing, and looking at the fundamentals of this. Very curious to hear your thoughts on when we put space market into phases. Do you believe that it follows a similar logistic growth curve like the IT industry did in the late 70s and 80s and 90s? And to name a more recent example of that curve, the buildup of artificial intelligence and the hype around artificial intelligence from just maybe 5 years ago. Do you think it follows that curve?
I think that there has been always investment into the space industry, of course, at different levels. I think what has changed probably in the last 10 or 15 years in the space sector is that a lot of private money has been injected into the space industry. During years and years, space was mostly funded thanks to public. It's still heavily public funded, of course, space research and space challenges. But we have seen, the arrival of new players, and mostly these billionaires, Elon Musk, Jeff Bezos, Paul Allen, Richard Branson. I think they created a new passion for space. So I think we should be thankful to them, because now space is sexy again. And a lot of money has flooded through to space thanks to them, because they made it attractive again. A lot of young entrepreneurs are dreaming again about space. It's how the rise of what is called the new space came. I think it's one of the parameter, of course. This type of a new, let's say, entrepreneurial, let's say, probably generation. The amount of private money, I would say that there are a couple of other factors for the new space. One of them is the rise of what I call exponential technologies. So you mentioned AI, but also the 3D printing, the microelectronics. There are a lot of course, everything which is linked to data. And now I think for anyone, it's quite easy to get, let's say, space data to make some cool applications, which have quite useful, let's say, utilization here on Earth. So this has been possible in the last years, and this was an enabler for sure for the new space industry. We have seen also the emergence of new business models, because previously it was very simple business model. Companies were building technologies for ESA, NASA, etc. And now we see, for example, commercial companies around this data analytics things. We see companies around space tourism. Even now for the space debris removal, etc. So there are a lot of new business models that are emerging. This is what, and of course, in terms of launchers, we have seen now companies doing launch for better prices. Of course, SpaceX, but we can see Rocket Lab that announced recently a SPAC, like an IPO. All this contributes to the emergence of the new space industry. But I think humanity has always invested in space, because probably it's a natural, let's say, move of the human nature to always go beyond. And after the discoveries of everything on Earth, the new frontier is for sure space. So it's why probably there was always this willingness to explore new worlds, and the extreme new world is, of course, the space.
Here's a question for you. When we categorize a space market, we look at the two factors, time to value. We're looking at the four separate markets that are within the space market as an overarching. You have products and services that are orbit driven for Earth, orbit driven for neighborhood, very specifically. So diving into the niches, neighborhood for Earth. So even diving into a further niche, and then going, looking at the futuristic component of where you are presently and how that impacts the interstellar component. How would you structure the market in regards to how are you seeing this orbit for Earth market, this Earth observation market, to formulate itself? And to make it simple, the downstream of applications, is that just the space market? Is that it?
Yeah, it's a very interesting question. How I see it is, basically how we see, and also most of the community and investors see it, is that there is, of course, everything which is downstream and everything which is upstream. So what is downstream is basically all the applications that are using space data. It's mostly what is called downstream. And upstream is everything which is linked to the launchers and the satellites, basically. So everything which is above, let's say, our head is upstream. Now, this is one way to make the distinction. Another way is, the type of data which is used. So you mentioned Earth observation data. That's a big field. So all the satellites that observe the Earth and provide added value data, which can be temperature, which can be the lens, etc. So there are a lot of data that can be let's say somehow captured by these satellites, and there are a lot of applications, which is for agriculture, for maritime, for logistics, etc. Then there is everything which is linked to telecommunication, and it's probably the oldest one, because the first satellites have always been for television and for telecommunications, and there are still a lot of satellites which are used just for television, because if in our countries we have television over cable, but in many countries it's still the only way to get TV is thanks to satellite. So, and a lot of satellite companies, and I have worked with some of them. They became very rich and very powerful thanks to that, because basically when you launch a satellite, you can have 30 transponders, and for one TV channel, yes, you have to use one transponder, sometimes more. So it can be it was a lucrative business. It's much less thanks because of TV over internet, of course, and the Netflix and all Amazon Prime, etc. Makes things much more complicated, of course, for the satellite operators. And then you have, of course, satellites which are, let's say, for scientific missions, etc. These are a bit more, let's say, exotic. Regarding, let's say, the other application in space, you have everything which is linked to in-orbit, let's say, servicing, in-orbit maintenance, in-orbit manufacturing. This is a very growing field that most, let's say, investors consider that this is something where we should invest much more, because it's going to grow more and more. Even if the cost of launching satellites has decreased a lot, and mostly thanks to SpaceX, it's still expensive. So if you have an ability to manufacture in space, it can be huge savings. And after that, of course, when you manufacture, let's say, around the Earth, etc., you can imagine you can manufacture elsewhere. And this is mostly all the companies that are going to do the space exploration. And for space exploration, you need robots, you need to manufacture in situ. So it's all what is called in situ resource utilization, ISRU. For example, Mana Electric is active in ISRU to produce metals, to produce oxygen, to produce a lot of different things. There are also companies like Made in Space that produce that have 3D printers inside the International Space Station. So I think these are really the future of space. And of course, you have then companies that are active in transportation. SpaceX clearly they position themselves as a transportation company. Today they are mostly doing it between Earth and let's say orbit around the Earth, but their purpose is clearly to go to the moon and then to go to Mars, etc., and to become a transportation company. So I would say these are a bit the different categories of space companies somehow.
Yeah, it's interesting that you said, and it's something it just helps me transition into what I'm hoping to talk about next. Is right now there are so many working groups, and a specific working group by Moon Village Association on lunar commerce and economics, and it clusters the lunar market and industries that need to build something from scratch. That in situ resource extraction and construction that you're talking about, that Mana Electric is also associated with. It seems like, and it's a very similar approach to investing in a early developing country. Put money in. There's opportunity in every category, so there's something for everyone. Transportation, infrastructure, telecom, navigation, power, everything that you talk about, there's something there. So based on your knowledge and your experience, what are the first things to do in which order? In other words, what are the early segments of the market that need to grow? that investors very specifically need to look out for, need to invest in, and then how does the chain begin actually?
Yeah, I think it really depends from one investor to the other. I mean, I know some space investors that they only invest in downstream applications. So they want just to invest in applications like I mentioned for logistic, for maritime, for agriculture, etc. Because there is a very a near term, let's say, market, of course. So they see potential revenues at let's say reasonable horizon, which is not the case with let's say more futuristic projects. How I see it from my perspective is that it depends if you are, let's say, in passion to get back somehow your money, and also how much you can risk about your money. But if really you are a true space enthusiast and you want really to contribute to building the future of humanity and the future of space, then in my opinion, investors should invest more into in-space manufacturing and into the space exploration. Because if tomorrow we want to have people that live, work, enjoy, let's say, their everyday life into space, we need to build the infrastructure. So for me, the big challenge of the 21st century is to build a space infrastructure. I think as Jeff Bezos mentioned when he presented Blue Moon, is that we need to build the highway somehow for space. And it's basically what we need to do. So this will pass through big landers, big rockets, of course. And then you need to build also probably a moon base, tomorrow maybe a base on Mars, etc. In many decades. But yes, I think if at some point we want people to, as I say, to live, to work, and to just have fun into space, we need to build this infrastructure.
So you think people should be selling shovels instead of digging gold at this point?
Yeah, but it's a bit the chicken and egg story, of course, because I mean, if you look, for example, at the moon today, there are many companies that are active, let's say, on the moon. There are some just working on landers, some working on rovers. Some working on some processes, for example, like Mana Electric, more processes to use the regolith to manufacture, components that could be used on the moon. But at some point, and what they want today, I think the first mission, if you take a company like iSpace that I know a bit, which is also based in Luxembourg, they are working on a rover that will, let's say, dig the surface of the moon to take water. Why water? Because the water can be transformed into a fuel, and I think is the first way to prove that there can be some start of a lunar economy. Because at some point, the public agencies can fund partially, but they will not be able to fund indefinitely. So all these, let's say, space enthusiasts and space pioneers, they need to show, and if I take your analogy, that there is some gold under the surface of the moon. And if they show that there is some gold, then they can probably attract more, let's say, people that will, like in the gold rush, some show that they were gold, so then they start constructing cities around the gold mines, etc. and then you start to have an economy, etc. And I think it's a bit what could happen on the moon, because there is really a gold, I think, which is probably water initially, and then some other metals. But we need first to extract and to demonstrate that there is really the opportunity to use it. So unless this happen, I think, probably the rest will not follow.
One of the things that we're looking at is the problem that a lot of VCs, business angels, encounter is this problem of a fast growing niche in a non-obvious way. So, the niche market automatically becomes bigger just because more people are willing to solve the same problem. And it grows by a certain percentage. And what we have found is that it's 20% a year that it's growing at that rate. Because what we're trying to figure out here is that it becomes harder for companies to scale, to be able to address the total addressable market, and the services that they're selling become too saturated. So what are some of the scaling drivers, do you think, as a business angel, that are able to have the similar transport capabilities and the frequency of resources and the humans to orbit and beyond, as well as building in-space manufacturing, which needs raw materials, as you stated in your previous comment? Yeah, so how companies can scale, what are some of the factors of scaling that business angels are reviewing, are looking at, VCs are looking at? Because each investment thesis, as you said in the beginning, is that each individual's investment thesis or each company's investment thesis is dependent, and it's a variable of their approach and what they're looking for. How much risk is attached to that? So very curious to understand your opinion as to, are there any factors that are sort of transient throughout the entire value chain, or do you think that it moves?
Yeah. I think in terms of scaling, there are some internal factors and external factors. So, of course, external factors, are you on a market which potentially is very big, where maybe there are little entry barriers, etc. And so basically you can scale because you have a strong, let's say, business model. I think this is a general comment which is valid for all companies, which are space or non-space. But clearly, when you look at space, the downstream companies have, of course, generally a much bigger facility to scale than companies that are going to make deep exploration, etc. Because also of the amount of funding that are required. If you are a company building a moon base, for example, or moon habitat, you need first to go on the moon and to build, etc. So it costs a lot of money. So the scaling ability is, of course, much less than if you sell data for the maritime sector or the aviation sector, like Spire, for example. So I think that's the first parameter. I think it's mostly what are the external factors. The internal factors are more linked to the organization itself. And as an investor, I think it's also very important to look at this. What is the team? Is the team well organized? Are the responsibilities among the team clearly defined? Is there a clear alignment? Is there enough, let's say, execution within the team, etc.? I think this is, of course, very important also in terms of scaling, because some founders are very good, let's say, initially to create the company and to build, let's say, the early company. When the companies start to be bigger and bigger, for some founders it becomes another story, and they are not just prepared for that. Some are smart enough to get people that have this experience to manage much bigger companies, and they put them on board. Some founders, they don't want to share somehow their power, and for me that's a mistake. And so they try to do it by themselves, but they just don't have the experience to do it. Running a company of 5 or running a company of 200, it's something which is completely different.
Being in the position of leadership that you're in now, what do you typically advise these companies that you see on a month-to-month basis, or the ones that you have been able to mentor in the past? What is the advice that you give to especially space founders in this case? Because a lot of space founders are very altruistic. They have big ambitions with little roadmaps sometimes.
Yeah, I agree. I think the first thing that I give as an advice is to have a long-term vision, and they should have a strong purpose, so they should know exactly why they do this. Okay, I think what they want to create, what they want to impact, and I think one of the first thing to do is to have a master plan. And I always like people that have a master plan. What I call by a master plan is that they know, okay, this is what I'm going to do. This is how I see the company. So in 5 years, I will be this size of company. I will have raised so much. This is where what I want to achieve by then, etc. And they have the clear milestone in mind. For example, in my case with Mana Electric, when I met the founder of the company, Jos van Oskot, he was pretty young, but he was quite mature, and immediately he presented me the master plan. And I like it very much because it was super clear. And to be honest, we are just following the master plan today. So a bit like, when Elon Musk presented the Tesla master plan, it was the same. Let's start with the Roadster, then we do just to demonstrate that it works. Then with Model S, we will address already a larger market, but which is still premium market. And then with the Model 3, I will, let's say, go into the mass market, And I think what probably most of space founders are missing is such kind of approach. Most of them, they come from a technical background. So they are super smart, and they know the technology they want to build, but they have no idea how they are going to commercialize it. They don't have a clear view of how they are going to go there, and what will be the different, as I said, the milestone, the different steps they will have to take. So my advice is that they should have around them people that are probably experienced and that can help them to somehow materialize their vision, and from just an idea to materialize it into some breakthrough venture. I think that's probably what they need to see and to approach it. It's not a one-man show or even a several-man show. I think it's really to build a team, and in the team you must have different diversity of people and background.
Space industry itself and space companies are looking for long technology roadmaps because of the complexity and the amount of hardware that is involved. Should these companies be looking at whether they have somebody on their team that has an MBA? Should they go and do an MBA and then start? Should they buy the products from the value chain? Should they make their products? What are your thoughts on that?
I think MBA is of course interesting studies. I don't think that it's mandatory to have MBA. As I always say to the startup, the the basic of a business have not changed since the early age of humanity. What is a business is that you provide something which has value to some people because you are just filling a gap. They need something, and if you can provide what they need, you will just sell to them. And of course, in order to sell it, you need, of course, to eventually produce your product or your service. So you have some costs which are associated to that. That's the basic of the business, and they have not changed. And so coming back, let's say, to the first principles, which I think is a red line among, let's say, this podcast. I think this is probably, yes, the first principles of the business. So what is the value that you want to provide? And this is valid for any business. So if you look at space and again, if we go back, for example, for the moon, what is the value that has to be provided, and what are the potential customers? And most of people active in the space industry, they don't think enough, in my opinion, in terms of the customer expectations. So if you look, for example, at Alan Christensen's work, with the value proposition canvas, etc., the jobs to be done, and I think it's a great model. He starts from the principle that every customer they need to fill jobs, so they have jobs that wants to be done, and today they have some pains to get these jobs done, and they have also gains that they expect. So I think every entrepreneur, in my opinion, should approach their idea from that perspective and see, okay, I have this target customer, they have these jobs to be done, and they have some pain, some gains. So how I can create some pain relievers, how I can create some gain creators, and from there, what is my value proposition? Once you have your value proposition, it's just a matter to see how to make a business out of there, to see if you can create some viable business and some scalable business. And that's in my opinion, the process that every entrepreneur should follow. But not, okay, I have a great idea, I can build a great product. Okay, but is there customers for that product or technology? Sometimes there are customers, but the problem, and it's something that most entrepreneurs that I meet are forgetting, is a question of timing. Is it the right time today for this? And this has been well modeled by the Moore's, what is the Moore's curve, that there is the early pioneers, then there is the early adopters, the early majority, etc. And sometimes you are just too early for the market. So if I look at the moon, today, is it the right time? Is there companies that, yes, there are a few companies that have an interest. Some big corporates that have some interest probably, but they don't want to make the first step. So they want some others to take the first step. When it will be demonstrated, they will let's say, probably buy. So on the Moore's curve, they are more maybe in the early majority, but they are clearly not the pioneers or early adopters. And today on the moon, the pioneers and early adopters are crazy entrepreneurs like iSpace, Mana Electric, etc. And agencies like NASA with Artemis program, like ESA, etc. These are really today the pioneers and early adopters, because the other ones, they are just not ready today.
So here's a question. You talk about pioneers, but these pioneers need a level of funds in order to continue support the vision that they're possessing. So in that case, typical time frame that we've noted is between 8 to 10 years in between when the funds come in and then when the product is actually out there in the market, actually doing something. There is a gap that we have found, that the number of grants and government funding that goes into a lot of these pioneer focused missions is significantly higher than the number of VC and private funding. So how can VCs and business angels address this gap? What are some of the what kind of technologies in the space field, in the space startup, need to exist in order for this gap to sort of minimize itself?
Yeah, great question. I think it's complicated for investors today, for sure, because as you mentioned, probably if we look at upstream and space exploration, yeah, we are talking probably, like you mentioned, between 8-10 years, if not more. So for most of the VCs, it's very complicated, and for the audience to understand why, because the VCs, it's a very particular, let's say, model. Generally, they raise what is a VC? It's a venture capitalist. How they work is that they raise funds from limited partners, so it's institutional, let's say, investors that invest into a fund that is, let's say, created by this venture capitalist and managed by what is called the general partners of the fund. So they raise money. And when the money is raised, generally they invest during 3 to 4 years. And then they have a duration generally of the fund, which is something around 10 years. So for them, they need to bring, let's say, of course, some results to the limited partners within that period of time. And mostly why? Because of course they need to give some return to their investors, but also for most of them, if they want to raise another fund, they need to show some good results. Otherwise, they are seen as bad, let's say, VCs, and they will not be able to show a good track record, and they will not be able to raise another fund. So for all these reasons, their period where they are expecting returns is pretty limited. And it's true that for them, space exploration is very, very difficult for them. So one way to mitigate this is to look at space companies that are doing space exploration, but that they have somehow where their technology somehow can be used also on Earth. So when you have a kind of hybrid or dual model where you pursue this long-term vision on space, but you have at a reasonable time frame some revenues that you can generate thanks to the technology you are building, but for example on Earth or on space, but for example in let's say low orbit, etc. Then you have a more, let's say, attractive business model. If I look, for example, I mentioned Made in Space. Made in Space is already able to generate revenues from their 3D printers into the International Space Station, while they are working on more long-term, let's say, applications for in-space manufacturing, for example. So this is, I think, the way for space entrepreneurs to be able to get funds is when they can show that even if they pursue their long-term vision, they can bring some revenues at short term. And let me give you a very crying example is SpaceX. It's exactly what Elon Musk is doing because, Elon Musk, he invested money himself, but he also raised a lot of money. And how he convinced investors is that his business model is a very profitable business by just sending a lot of satellites today in low orbit around the Earth. But his dream is, of course, to go on Mars and to have these big launchers, etc. So I think it's exactly the model to be followed by entrepreneurs. While you pursue your long-term vision, you have a business model first that can be profitable at a reasonable time frame. I think it's the only way to convince investors. Otherwise, if your business model is exclusively on the long-term vision, I think it's very complicated.
Elon Musk contradicting everything that the VCs stand for. They're looking for revenue. They're looking for power. They're looking for something that meets that criteria of their investment thesis. Now, do you think that by they, I mean the billionaires are the outliers here? Is that, the larger, they are changing the way that the market investments are made?
No, I think the only difference is that, of course, when you are a billionaire, you can invest a big portion of your funds into your companies. So, of course, this somehow gives some some guarantee or some it reduces somehow the risk for the investor, because and this has always been, in any business, when you are an entrepreneur, if you invest funds yourself in your business, an investor will have more willingness to invest into your business because you are risking your own money. So it shows that you are really believing in your business. If you are a founder and you ask, I don't know, 10 million, for example, to a VC, but you don't invest, you invest just zero or 1,000. I mean, if I'm an investor, okay, I give you 10 million, you just invest 1,000, so you don't want to take risk. Well, of course, maybe they don't have the money to invest, and most young entrepreneurs, they don't have money. They have their energy. They have a lot of ambition. And so this is really what they bring into the venture, of course. But I think in the case of these billionaires, the fact that, of course, one can invest, like Musk, I think he invested into SpaceX 100 million or something like this, of course, give investors, either they believe he is crazy or he knows what he is going to do, and he believes strongly in what he is going to do. So I think that's the main difference.
We looked at before, during our prep, we looked at several models, and we looked at the capital asset price model, and how the risk variables of an investment are sort of considered in overall, several ways. Space is hard. We know this. And other variables need to be considered when you're thinking about the influence that is incorporated within space. The transportation, the risk of failure is successfully high. I mean, we can say that because of the number of experienced missions that have been seen. 80%, according to 2020 Q4 Space Investment Quarterly Space Capital, 80% of investments in the last 10 years went to space applications. And mainly, most of them have been downstream, EO, GNSS, telecom, which I'm sure you know. How do space investors handle the risk that comes alongside space being hard? And what are the fundamental uncertainties associated with investing in space?
Yeah, I like this question because it's a question that is often, let's say, debated, let's say, into panels, etc. And I think, first of all, probably space is one of the industries where risk is best managed, I would say. Why? Because when you want to launch something in space, you need to be sure that it's going to work. So most of the space engineering is used to manage, let's say, risk and to assess risk. So when you look at most of engineering studies around space projects, there are risk assessments, etc. All the risks are well define with mitigation solutions, etc. So, and that's probably the only industry where you do this, maybe with some, let's say, maybe in the chemicals or probably health industry too, probably. But in the software industry, I'm not sure that there is such kind of risk assessment, for example. So in that respect, I think we can expect from the companies themselves that they all already manage quite well the risk. Now, from an investor perspective, my approach is the one, and it's not coming from me, it's coming from Richard Branson. I heard first time from him, and I take this as the first principle of investing, is what he calls the asymmetry of risk. What does it mean by this is that what is my downside and what is my upside? And always during an investment, try to minimize the downside and maximizing the upside. And the typical example that Richard Branson gives is when he launched Virgin Atlantic, he had with Boeing buyback provision, a sales back provision for the aircrafts. So basically, if something wrong would happen, Boeing would buy back, let's say, the aircrafts. And so he had not huge capex, let's say, that he could not, let's say, sell back, and he would go basically bankrupt, you know. So I think is what most investors, particularly in the space, should look for is what is the downside of this venture, but what is the upside, and it's the role of the entrepreneur to show that the downside has been somehow minimized, and one way to minimize the downside is probably thanks public programs, for example, to debug and to de-risk all the technology. So if they receive some public funding to de-risk the technology to a certain what is called the TRL, so technology readiness level, which is high enough, so they have really minimized the risk that the technology would not work. But the upside, if it works, can be really huge, because maybe in some cases there are just no limit. So I think is how it should be approached in any kind of investment, but particularly in terms of space investments, is this asymmetry of risk.
And that's interesting because the risk of failure has a lot of implication on a VC's portfolio. Their prospective returns, obviously, you're bound to see that only one or two companies in portfolio have a success rate of 10 to the power of n, doubling or tripling any type of asset funds that are managed, and then you create like a hierarchical structure. Is that something that is typically done in the industry, that, you know, the two are starting from bottom up, two or three that are absolutely going to fail, one or two that are mid-level that are going to be successful, and then you have a beautiful primer, a unicorn company that I'm going to make all my money back with?
Yeah, I mean, for VCs, clearly, business angel probably think differently, but for most of the VCs and even in the space industry, they reason with what is called the power law of venture capital, you know. So there is indeed a very few companies that will give very high returns, 5x, 10x, etc. So with these companies, of course, they can somehow recover, let's say, the investments. For all the companies that either will just go bankrupt and just will fail, some that probably will return only the money that has been invested. And yes, a very few will be unicorns and will return a lot. And basically is how it works for most of the funds. So it's a very tough business, to be a VC, because you need really to do a few investments and to select very carefully the companies, hoping that one of them that you invest per year, because it depends, but some funds, they invest between just two to five, some maybe sometimes up to 10 companies per year. And they have really to select the few ones that they believe can give this multiple, let's say, order of magnitude return. And most of the venture capitalists, they receive probably 2,000, if not more, let's say, projects on the table. And they have to select in 1 year, and they have to select 5 to 10 that have this capacity probably to return a lot. So it's a very difficult business, and yeah, you need to look at what I call, let's say, the 4T. The first one is the technology. Is there a great technology or great idea, etc., that solve a real problem? Then the other T is the traction. Is there a potential market behind, which is big enough? We already discussed about this. Then the team is the team able to do it and to execute flawlessly the plan. And the final T is the time to market. Is it the right time for this? Will they be able to get into revenues fast enough, or will it be too long? I think these are the key questions that any investor should look for before investing. Yes.
It's interesting that you mentioned the differentiation factors between VCs and business angels. You're a chairman of EBAN Space. Now, that is a very, very different model than a typical VC because it's encompassing. How are those risk variables different between business angels and obviously the VCs you've already mentioned? What do some of the business angels sort of preach and follow?
Yeah, the business angel, basically the main difference. So a VC invest not his money, or a very, very small fraction of his money that he has anyway to invest in the fund, but basically they invest money from other investors. The big difference is that the business angel invests his own money. So typical business angels are either former entrepreneurs or former executives. Sometimes it can be money which comes from family wealth, etc. But so basically, they invest their own money. So that's the big difference. And they can have motivations which are not purely financial, because some business angels, they want to give back somehow. Because, for example, they were entrepreneurs themselves, so they want to give back and to help some entrepreneurs. Some, they want to be involved because maybe they had a successful career and now they want to help maybe young entrepreneurs and to invest a bit of money, but also to be involved, giving advices, etc. Or some is just also to have some occupation because, maybe they had successful exit, they are now wealthy, and but they want to keep an active life, etc. So the motivations are very different from VCs, and business angels generally, of course, invest much smaller tickets, so they intervene at a very early stage generally. Now it depends. Some business angels they want to exit quickly to have a reasonable return, so they can invest into a new company. And some business angels are more patient, and they will be able to wait until it succeeds. Of course, one big issue of business angels is that since their resources are limited, it's that over time they may be diluted, so they basically because other investors invest somehow for the money they have proportionally, let's say, less of the company. So over time they have less. But if they are patient enough, and if hopefully they can help the funding team, and if it's successful, sometimes it can lead, let's say, to a very successful exit. So for them, it's a good investment anyway. But I think in the case of business angels, if really you want to expect to have some good results, you need to invest probably in enough companies. If you invest just in a few companies, again, because of this power law, which is applicable probably to any investments, there will be only a very few that will return enough. So if you invest in less than 10 companies, probably it's too small. So probably they should invest minimum 10 and probably much more.
Here's a question that's more of a personal question for you. Do you think it's better to become a business angel than to become a limited partner at a VC, or is that person to person?
I think my advice to any prospective investor, at least if they have the capacity to do it, would be probably to do both. Maybe to have to be limited partner in a fund, and for some funds it starts with a reasonable, let's say initial investment. So at least you can benefit from professional, let's say, investors that are going to diversify and to give you a diversified portfolio anyway. And then maybe for a few selected companies, you can invest directly. And in my opinion, it's probably the best strategy as a business angel, unless you are very experienced, unless you and you do everything by yourself. But you need also to have the time to do it, because it's not only to put money and then. I mean, if you want really to get some success as a business angel, you need to be involved. So to spend some time with the companies, etc. Maybe to help them with your network, give them some advice. For example, if they are, let's say, they are missing some competencies in finance and you are good in finance, maybe you can help them in that respect. Or maybe some business angels, they help, for example, in the recruitment, because maybe they were used to do this, so maybe sometimes they look at some candidates, etc. So business angels should not underestimate the time to be spent. But if they don't have time and they are only passive, then the option of just investing into a fund as a limited partner is probably a good way to limit the risk, because if they go with some VCs that have some reputation and track record, probably they can limit the risk of their investment and get a reasonable return.
So we're talking about first principles, and we've discussed so many different risk variables that are associated with companies, but also risk variables that are associated with becoming a BA or a limited partner at a VC. Do you think it's better to have a broad portfolio for a general investor? Meaning invest horizontally across multiple verticals within the same industry, or you think there should be more of a diverse or a vertical focus? Invest in big data, invest in mining, increase your exposure. So what lesson from a historical context can we draw from? And this is something that I'm very curious about, because it's not the first time that we're endeavoring into exploring undiscovered land and trying to make it our own. If you can imagine 150 years ago, similar approaches were happening as things were changing, as the landscape was evolving.
Yeah, no, it's a great question too. I mean, again, there are some first principles to here. First of all, invest in what you know or if you don't know, try to learn about. And today, it's really possible to learn about anything. But try to first understand. So, for example, personally, I invested in AI, but in an AI company, but it's something that I learned because I was not an AI specialist. So I took an online course at MIT about AI just to understand and to also understand what the guys were telling me. Because sometimes there are some people, I'm doing AI. Okay, what is it exactly? Okay, it's machine learning, but what are you exactly doing, etc. You need to be able to ask the right questions, etc. And to challenge, let's say, the entrepreneurs, because, let's be honest, some are just bullshitting, and they just tell you nice stories, but there are nothing behind. So as an investor, you must be careful because there is some form of scams, somehow, that some people, they just want to take the money, but there is nothing behind. And we have seen this a lot with cryptos, etc., and with the ICOs, etc. Some people, they had very nice stories, but there was just zero behind. So I think as an investor, you must be careful and learn. So first, invest in what you know, and if you don't know, just learn. I think to have a diversified portfolio for me is mandatory for sure, and across an industry, but across multiple industries if you can. So I know some business angels that invest only in space, but I do think that as an investor, you should invest in space, maybe in AI, and maybe in health and other technologies, etc. Also, another, let's say, first principle of investing is at some period just rebalance your portfolio, like stock investors are doing. So that at some point, maybe you need to get some exit and with the money to reinvest maybe in some other company, in some companies where you already invested, or to invest in new companies, etc. But at some point, it's good to rebalance. So I think these are probably the first thing that come to my mind is. And also, maybe one more thing is that don't invest if you have any doubt. If there is your gut feeling which is telling you, I'm not sure, etc., don't invest. I think the investment decision should be really when all the lights are green. But if there is something which is orange, I would not recommend to invest. It's not a good sign. So, yeah.
Investment in commerce is not necessarily the most scientific approach to this. There might not be any deep science or formulas that are related to how you invest. And right now you mentioned the aspect of doubt and emotional interaction and emotional EQ per se have a balance of IQ and EQ. I'm very curious to hear your thoughts on how can a person increase their chances of finding that outlier? Is it through investing and spreading that risk, or is it the alternative, which is in this case invest in what you know, like you said, and see where opportunity comes to exit?
Yeah, of course. I think investing, of course, is not, in my opinion, considered as a scientific, let's say, field of study. Now, there are some rationales, of course. You can look at the financials, calculate, let's say, the valuation, and there are some, let's say, mathematical models for that, like discounted cash flows, etc. So I would say there is some science and some mathematics, let's say, behind, for sure. But ultimately, most investors probably, they make their decision on a series of factors and parameters that I mentioned before, like the team, the technology, the market, the time to market, etc. So, and then it's a question of gut feeling. and basically how much confidence they have into the entrepreneurial team. That's most of the time what motivates them. Maybe they also see that this is the kind of business that can really be big enough, etc. So yeah, there are a lot of factors. So I think it's always not easy. Now, should an investor invest, let's say, a lot or be more picky? I think that it's better to be picky and to really study before each investment than to just spread the money everywhere, etc. I will not recommend this approach. I think for me, it's best to study. And like Warren Buffett lesson, that he is sometimes just studying during 1 year to do just one investment. Why not? I think it makes sense at some point. Unless someone is really in a hurry to deploy the funds. But otherwise, I would recommend to take time to get the right opportunity and to really have confidence in the funding team, in the business model, in the market. And when you have all the green lights, then at some point you have to go if you can have a good deal. But it's probably not a business where, let's say, you can take a quick decision based just on instinctive, let's say, decisions, etc. I think it's something where you need to really weight all the parameters, etc., and see, okay, is it really something that is speaking to me? Do I have confidence enough?
The first IPO started just last year with Virgin Galactic and Astra, and everyone is waiting for Planet and SpaceX to join them. But there's now a new shortened path that has been created, and exits are becoming more and more, they're popping up like flies everywhere. What are kind of empty company containers full of money waiting to buy others who are not listed? I'm very curious, how would you interpret this trend of the lack of maturity in technology and actual readiness levels, and the way that these SPACs are now being concluded and being funded?
I would say from time to time, there are always new instruments, let's say, that appear like this and creates the hype. I mentioned earlier the ICOs. If you remember, it was 2 years ago, something like this, that there was this hype with ICOs and everyone wanted to make an ICO. So raise tokens and to finance two tokens. And I think a lot of people, they did a lot of money with that. And a lot of people just lost a lot of money with that. SPACs, I will not say that it's the same, but it's a new tool for sure. I think that the companies that, if we look at Virgin Galactic, I think they have something concrete. So it's not like in the case of ICOs where there were a lot of scam companies, of course, nothing behind. Because, of course, in the digital world and the cryptos, you can say whatever you want, of course. It's difficult to judge if there is something concrete behind. I think here in the space, there is something else. And if you look at Virgin Galactic, they have really something which is concrete. If you look at Spire, that announced recently a SPAC, they have also something concrete. They have a real business. I know the founder, he is a very serious guy, etc. If you look at Rocket Lab, it's the same. So I think there is something behind. So that's for sure. Now, the question mark might be around the valuations, but valuation is always a tough topic between the investors and the founders. So here, how the valuation has been, let's say, evaluated, I don't know exactly, to be honest. Is it realistic? Is it not? I don't know, but I guess that it's based on some rationales, probably. And so again, when you buy, let's say, shares of these SPACs, you need just to make your due diligence and be confident into the company, and hopefully that yes, it will be worth the valuation that it's announced.
It's very interesting. I mean, you said something that I want to point out is that in the past, SPACs are old. We know this. SPACs are old. They've existed since the 80s, and there have been SPAC waves throughout the decades. But the most recent SPAC wave brought up something very interesting: is the number of investors that are within these SPACs that are celebrities. The amount of money that is being pooled to get these SPACs to where they are. There's no real decent rationale as to why that is happening. As a business angel, I'm sure you're like, this is a big question mark as to why these SPACs are even investing in companies that are not there yet. Why do you think that might be? Do you think this is just a trend, just like previously, or do you think it's going to disappear?
Yeah, I think it's a good question, but the future will see if it's just a trend, etc. I think from time to time we have such kind of trends. I do. My feeling is that probably after that we will come back to the reality, and the reality for most of space companies is there has been, of course, a few IPOs, but the most of the exit for most of space companies is through acquisition. And I do believe that there will be more and more consolidation in the space field. Because about everything that we discuss, it costs a lot of money to go to space, etc. So in my opinion, the consolidation will just continue. And what might be different is that, before there has been this huge consolidation with Airbus, Thales, all these big players, etc. The same in the US. Maybe we will see such kind of consolidation among smaller players. So maybe some new space players that somehow are complementary will just merge or join their forces in order to be stronger, because they maybe are at different levels on the value chain, and so together they can have a more comprehensive offer for potential customers. I do think that this will be probably the future of the space industry. And yes, the SPACs, I don't know. Let's see. But personally, I don't see a long future for that. But
that's a good point that you make, because it kind of brings up this idea that because a lot of these SPACs are happening in states, what do you think could be the next hotspot for the next wave of space startups? Where do you think that could be? Do you think that's where the funding is? I'm trying to think about people moved to Silicon Valley because there was a large trend. Where is the next Rocket Valley or Satellite Valley? Where should an investor look? Where should a founder go? Luxembourg, Germany, going to the West Coast, but going to the East, perhaps China. What are your thoughts on that?
I think US will remain a very strong country because it has always been very active into space, and there is a lot of money which is invested also by NASA, etc., to support the space companies in the US. So US will remain very strong in the space area for sure. I think Europe is strong and will be stronger and stronger. The last ESA budget is the biggest one that has ever been voted. So for sure, and there is no new Director General, Josef Achenbacher, and he wants more to follow somehow the steps of NASA with more, let's say, private contracts, etc. So I think this is going to fuel a lot of many more, let's say, space companies in Europe. So definitely, I think Europe is going to be really great at the space level. Within Europe, there are of course some very particularities. UK has always been very strong. Luxembourg did amazing, let's say, in recent years, and it's really becoming a very important hub for new space companies. I will not underestimate UAE. That really did a lot in recent years, and the UAE agency, they have very big plans, etc. Obviously, they have a lot of money. So I think we are going to have big surprise also coming from Middle East. And of course, we cannot, let's say, ignore, let's say, Asia for sure. Japan, China, and some other countries, of course. But I know less, I would say. As far as I know, I would bet still on US, Europe, and maybe Middle East. I think these territories, in my opinion, in the 10 coming years will remain strong, even not stronger.
And what do you think, in your opinion, being so in close proximity with Luxembourg and being in Luxembourg, what do you think Luxembourg is doing right that others can follow, perhaps, in the case of space resources and a large proponent coming to the lunar economy from there?
Yeah, I think what Luxembourg does is that, first of all, they play their role as a government. I mean, they really invest in companies that just can make some immediate return for the country. If I look at a company that I know quite well, Mana Electric, we are supported by the Luxembourg Space Agency, and thanks to them. And we started in 2018. We were just, let's say, 5 co-founders. And now we are more than 30 people, and probably by end of this year we will be 40, 45 people. And we attracted a lot of people that are coming from other countries. So now either they live in Luxembourg or close to the border, but they have some, let's say, economic life, let's say, in Luxembourg. So for the country, this creates some economical value. So I think they were smart to understand this, that the future of the country is to attract, let's say, emerging technologies and fields like space. Of course, Luxembourg has always been active in space thanks to SCS. But yes, they understood that they could become, let's say, be active in a very specific niche, the space resources, and they use the space resources as a kind of Formula One to attract, let's say, different, let's say, space entrepreneurs. And now there are companies active in downstream, upstream, in many, let's say, fields of the space industry that are active in Luxembourg. I think probably there are 60 now companies active in the space field in Luxembourg. So for a very small country like this, I think it's an awesome result. And what was the second part of your question? Sorry.
Well, we're talking about Israel, but I'm very curious to hear about your thoughts on the ship that you're running with EBAN Space instead, because what are some of the next steps, some plans around EBAN and space? Is there a hub coming up? Is there an accelerator? Is there a hackathons happening?
No, EBAN Space is I would say, at the heart of the ecosystem in Europe, in the space ecosystem in Europe. So we have connections. We have, of course, a very strong relationship with ESA, but we have we have interactions with all the key stakeholders. So, of course, the startups, the entrepreneurs, the corporates. For example, we did 2 years ago an innovation showcase at Thales in Cannes. So we invited 8 startups to come there to present themselves to Thales. Thales follow up with each of them, and in some cases, either the Thales invested into the companies or is doing business with the companies. So we try to be an enabler. We organize also events. Of course, before the COVID, it was physical events. Now it's digital events. Last year, we organized about 10 webinars. And 4 of them were with ESA. So we had Josef Achenbacher, so the new Director General. He was there. We had the former General Director, Professor Jan Werner. So we also organize a series of webinars with different actors from the space industry, from Americas, from Asia, from Middle East. So we try. One of our role is also to demystify space, so that normal, or I would say non-space business angels, they understand the benefit of space. We will do much more in the coming weeks and months. There will be several announcements in that respect. So we try to be really active in the space ecosystem and trying to help basically entrepreneurs in different respects. So of course we invest into some companies, but we also provide mentoring, we provide connections, or we just raise the awareness, or we put in touch other investors with startups. For example, at the events webinars that we did, after each webinar, there were startups that were able to pitch, and there was a jury from EBAN members that were selecting, let's say, one at each event, and then the winners they had the opportunity to pitch at an investor forum in front of, let's say, VCs. And in some cases, some investors are going to invest in some of these companies. So, and yeah, these are some companies where sometimes some of our members have invested into the companies. So for us, it's a way also to catapult or to boost some of the startups we have invested in by giving them a much bigger visibility thanks to our network, because we have really connections at very high level. So that's
and it's very interesting because the space community that is related to EBAN is quite robust, and there are individuals that actually understand the ecosystem very, very well. So I'm very curious to hear your thoughts on, what would you recommend to your other business angels? Should they invest in space? They invest in space and come to EBAN and learn about space? Should they go to International Space University to learn about space? What are your thoughts on that?
I think if of course some investors, they want to invest, some business angel, they want to invest in space, I think being a member of EBAN Space is probably the best platform for them to be really aware about the opportunities into space, and to be also supported by a group of individuals and organizations that are really at the heart of the ecosystem. It's true that among our executive team of EBAN Space, we have a representative from Seraphim, from ESA. So we have really a well-diversified, let's say, board, executive team, where, we have really the among, let's say, the most, let's say, influential, let's say, people in Europe and even in the US in terms of space investing. So yes, I would encourage people to just reach out to me and contact us and to be part of the team. Now, if they want to learn about space, I mean, yes, there are plenty of online courses, etc. There is ISU, and for example, at ISU they have this executive program of 1 week, which is, I think, if of course the guys they don't have time to do a 1 year master, there is the 1 week, let's say, executive program, which I think is a great program to have a general overview. So there are plenty of ways to know about space, or to just attend, our webinars. I think it's also a great way to know more about space investing.
Yeah, definitely, and I'm sure we'll find a way to link the two when we're ready to publish the episode. But I'm very curious to, and I always ask this to all of our guests, that why do you think, why and how should humanity push to be space forward?
I think I already answered this. I think it's really inside humans to always explore. From the early age of humanity, humans, they always wanted to see beyond, let's say, the next garden, then the next, let's say, forest, then the next sea, etc. So I think it's inside humans to always try to see, okay, what is there, and to explore. And of course, on Earth now we have explored almost all the surface of the Earth. So the next frontier is really space. There are so much to be explored into space. Now, space is the hardest, let's say, environment to be explored. Because most of us, we are dreaming about space, but space is really not nice. There is radiation, you cannot breathe, etc. So it's very difficult to go into space. But yes, what is there behind? Is there some other life? Or so, I think we have so many questions about space. Also today, we can go up to the Big Bang, thanks to the very large telescope in Chile. We were able to see some celestial objects that are a bit before the Big Bang, so we understand a bit better how the universe was created. But again, what is the meaning of all this? And some people believe in God, some people don't believe in God, etc. But I think that there is probably a space is linked, in my opinion, and that's my vision, is probably linked to somehow also very philosophical questions or spiritual questions from what is the meaning of our presence on Earth, etc. And when you are in space, and it's what all astronauts are saying, is that you have a different perspective, because you see the planeters as a spacecraft, and we are there. But what is the meaning of all this, and what is the sense somehow of humanity, etc. And I'm convinced that space give this perspective, that at somehow, because you see the Earth from above, you have another perspective to see humanity. And so I think this is very interesting, in my opinion.
Well, I think we couldn't have wrapped it in a better way. this has been a very, very insightful conversation for me, and I'm sure it will be once our audience listens to it. So I truly appreciate you taking the time today and sharing the insights, diving into the first principles as we are embarking on this journey. And I think it's safe to say that anybody that is going to listen to this conversation is going to have a lot more information about how to invest and what to do than they had before. So thank you so much.
Yes, thank you, Hussein. It was a pleasure to be here. It was very cool, so thanks a lot. I hope, yes, indeed, that the audience will learn something, and probably they will have a different, let's say, understanding about space industry.
Absolutely. And I think it's important to say that, the stuff that you're doing and the stuff that you've done, it's been a vital component of why we've been able to have that conversation today. So, thank you for your leadership and guiding the European Business Angels Network. And of course, can't forget your time at ISU Invest. So once again, thank you so much, Fabrice. It's an honor to have you, and we hope to catch up in the future as well. Thanks for joining us for another episode of Space Forward. Stay tuned for more deep dives, explorations, and journeys we have in store for you. Follow us on Spotify, subscribe on Apple Podcasts or YouTube. Hear you next time. And don't forget to send us your comments and questions. We will feature them in one of our next episodes. Stay tuned and see you soon.